equity mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
All right, well, welcome to another episode of Equity Mates, a podcast where we break down the world of investing to make it easy for you guys, so hopefully you can make a return. I am Bryce, and for the first time in a while, I'm not joined by my equity buddy, Ren. Instead, I am joined by the wonderful Matt Leibowitz, CEO of MiSTAKE. If you guys haven't heard of it, it is a platform that allows you to buy stocks and ETFs and that sort of stuff in America.
That's right.
So welcome, Matt. Welcome to the show.
Thanks for having me. Appreciate it.
So we caught up over coffee a couple of weeks ago, and I was pretty excited that you guys got in touch. And this is a world first for Equity Mates. We haven't had a live recording before. And in that coffee, you said something that sort of resonated with me, and I sort of thought about it when I left. And you said, I'm a trader at heart. I'm not a businessman. I'm learning the business side, but here you are, deep into business. Yeah. So talk me through that comment.
Yeah, no, look, it's really like trading is what I'm really passionate about. The markets to me, they're incredibly exciting. It really resonates what I believe is that, it's really about people coming together and challenging yourself every day. I feel when you're in the financial markets, you get to test yourself. The market doesn't discriminate by colour, by age, the amount of education you've had, the amount of money you have. It's pretty much the most even playing field you can get. So to be able to go into that coliseum really every single day and test yourself, for me, there's nothing more exciting than to get that feedback and just to improve every single day. And it's a very different discipline to running a business. It's, the trading that I grew up doing, obviously working in a high frequency trading firm was very short-term focused, whereas growing a business, you've got to have a bit more longevity in your vision and a lot more patience. Trading requires a lot of patience, but from building a startup like us, you've got to have a long-term plan and you've got to ride through the ups and downs. So it's a different discipline, but thoroughly enjoying it.
So let's look at that. When we talk on the show, we make a distinction between trading and investing, because trading, as you kind of mentioned there, there's a lot of high frequency trading and algorithm-based trading, that sort of stuff.
Sure.
So which way do you swing towards if you had a preference? And did you always start out as a trader, or are you now finding that the way that you swing has changed?
Yeah, I mean, look, I've been in the markets for sort of 20 years now since I started uni. I'll say firstly, I see investing as a subset of trading. When you invest, you need to buy and you need to sell. Yeah. And that you need to place a trade and you need to place another trade. So at the end of the day, trade is a very broad definition and there's different styles. It's like a tennis player. Like some people hit a lot, like a Rafa Nadal hits the ball a lot. Yeah. Someone like Federer will hit more winners, for example. So, it's your style can determine, what sort of trader you are. And you can be a short-term or high-frequency trader. You can be an algorithmic trader. Those two can be the same. Mm-hmm. You can be a swing trader where you trade over medium terms, and you can be a long-term trader, which is probably more of an investor. Mm-hmm. Or you can have one strategy for short-term moves in the market and one that satisfies you for long-term moves. So I don't look at it as an investor and trader as different. I just look at them as your strategy differs. So I consider investors subsets of traders because at the end of the day, it's someone who buy and sell. Yeah. So they still need to place a trade. At the end of the day, anyone who places a trade is a trader.
Do you do any trading in its purest form right now?
Yes, I do. Yeah, absolutely. When I'm investing, I'm still trading, from my point of view. I run sort of two strategies. I run like a long-term approach. I look for high-growth companies that are going to basically, that are trending upwards, and I feel that they've still got that path on them, but I'll be a hawk on them. I'll keep my eye on them, and if things change, I'll quickly get out. So it's a long-term view, and I want to stay with the momentum of a stock for as long as possible. I mean, if something's working, you want to keep doing it. Trading is like any lesson in life. It's you keep doing what you're good at, and you either get better at things you're not good at, or you stop doing them. It's like anything. It's like the way you eat, exercise, health. There's no real difference. You just got to keep doing the good things and cut out the bad things. That's all the trading is. You want to stay in the trades that are winning, and you want to cut your losers as quick as possible. And that's the same with investing, really. It's like, if you invest in a good company that's working for you, stick with it. Yeah. If it's not, well, reconsider it. Is that a company I still want to be invested in?
No, it's a good point, but I guess the hardest thing is to find those companies to begin with.
Yeah.
So MiSTAKE is a reasonably new venture for you, but let's start with your background.
Sure.
You initially started your career in Allen's.
That's
correct
right.
me if I'm wrong.
Yeah. Good research.
In in as a lawyer.
I was, yeah.
And then you moved into Optiva.
Yeah, that's correct.
From
yeah.
Allens.
That's correct.
So I guess I'm interested, why the move from lawyer to trader, and how did that come about? What did you study? Talk us through that sort of period of time.
Well, every good Jewish boy does what his mum says. So I did a law degree and I went into a law firm. I got a job at a great law firm. Allens is an amazing law firm, and it was a great. I was there for 5 years. I was there for a year and a half as a paralegal before I started, and then 3.5 years I was there as a lawyer. And I just got a great experience. Some of my best friends are still the guys and girls I started with at Allens. Yes, I did a law degree, I did a finance degree as well. So I went into law. I did securitization, which was when people do loans, they package them up and they resell them. So like you've got a credit card, for example, lots of credit card debts, you package them up and you sell the group of them to investors. I will do the documentation on that. That's pretty much what caused the GFC. All that subordinated debt and that sort of stuff. So I couldn't quite work out how it all fitted in at the time, but then I actually moved across in 2007. I started Optiva. My maths was my real passion, and markets and just that dynamic atmosphere of being in the share market and the stock market really grabbed me. And I went and did a maths test, and I turned up to Optiva in a suit.
Is that not the vibe?
No, definitely not the vibe. I quickly got my tie off and put it in my pocket. I was still there in the suit. There's no tie on. There was a guy rolling around the skateboard with no shoes, and I thought, there's no way I'm going to get a gig here. But yeah, it worked out really well. It was an amazing ride, and I started in the second half of 2007 trading on the Hong Kong market. So there's some big Chinese banks there, and I learned what it was like. It's like a new language, going from writing legal contracts to trading options contracts, and I just absolutely fell in love with it. I was people that were engineers, some people that studied history, like coming across people that had never been to university when I was in the States for Optiva, and they were trading on the floor, and I quickly realized that the market was really a melting pot for society, and it didn't matter where you came from. As I said before, it was a total equalizer. And it really was I just fell in love with it. I fell in love with how quickly things moved, how quickly things changed, how connected you were to the world. Something happened in America or China or Europe, and that would affect the price of an Apple stock in the US, or like you'd have a 10 cent in China would be affected by what happened overnight on the US market. Like I just felt there was so much to grapple with. You were just learning all the time. Yeah. It's something I just absolutely loved. I live and breathe the markets, and when I was in the States with Optiva, I really got to see just how powerful the US markets were in terms of the opportunity they had, the sort of companies that you could invest in or trade, or the opportunity, just the breadth of products they had. And then I came back to Australia, and I saw a real gap that Australians weren't given the same opportunity. So that led me to starting. So I was at Optiva for just under 10 years. I was a partner there for the last 5. So I had a great ride.
Can you just give a brief description of what Optiva does? Because I know it's quite a complex business, sure. And if you were to explain it in a couple of sentences, I'm sure you'd lose a lot of people. So, because from what I understand, that really gave you the skills to move into state.
Sure.
And, in terms of creating markets and that sort of stuff and getting an understanding of it. So, just briefly, what is Optiva? Because a number of our listeners would not have.
No, absolutely. It is quite complex. In its purest sense, Optiva is what's called a market maker. So financial products, they don't trade like normal commodities in terms of like a bottle of orange juice. You go into a store and you buy orange juice, the price is there. For financial instruments, sometimes there's no price, there's no known price. You actually need someone to actually go tell you the price or to give you an option to buy or to sell it. And Optiva is the party that puts the buy price and the sell price. So if you want to trade a product, you know what price you can buy it at or you can sell it. And Optiva is the person or the company that makes that price. So it's called a market maker, so it makes a market. So if you want to go buy BHP, for example, and you want to buy an option on BHP and it expires in June 2018, there's not many people that can make that price, but Optiva is one of those parties that can say, if you want to buy it, or if you want to sell it, you can buy that option. You can sell it option for $1.04. If you want to buy that option, you can buy it for $1.06. So Optiva makes the difference between the two.
Across any asset class, or
mainly it's derivatives. Okay. So derivatives, another complex piece, is options and futures, really. So Optiva makes prices on listed products, so things that trade on the SFE, which is the ASX now, or on the Hong Kong Stock Exchange, or on the CME in Chicago, or on the CBOE in Chicago, all these different exchanges. Optiva sits on those markets and makes prices on all those instruments.
So something you said before about why you love the markets and that kind of resonated with me is that it makes you look at the world in a completely different way and forces you to look at things that you've never sort of contemplated looking at before and understanding the ways things work, right? And going into Optiva in 2007, just prior to the GFC, it would have been a very interesting time. So I'm wondering what that period of time, the GFC, did it challenge your ways of thinking, and what was probably some of the biggest things you learned as an investor coming out of that?
Yeah, I think I learned that investors have always sold the story that you only need to buy stocks and you can only make money where stocks go up. And what I learned at Optiva is that there are so many different instruments that institutions use to make money. And a lot of institutions left the GFC with much more money than when they started. And a lot of retail investors left with a lot less money than they started. And to me, that didn't make sense.
Big Short.
Yeah, the Big Short, right? Don't get me started on Michael Lewis. That's another story. But in essence, retail investors don't have the same access that institutional investors have. And they don't have the same protective mechanisms, and they don't have the opportunity to make money when things aren't going quite right. Like, they can't trade in both directions, or they're not encouraged to trade in both directions. Whereas as an investor, your clear goal is to make money and to stay and make sure you stay alive so you can make money in terms of your portfolio. Protect your capital. Like it's like a business. Like you can have a little bit of revenue, but your costs are going to kill you, right? So the way I looked at it was that institutions had this enormous amount of power and retail investors had very little. And I learned that actually any retail investor who applied themselves could actually have access to a world of opportunity that just every man on the street wasn't getting access to. It's just a little bit of digging. Just being able to trade all these exotic instruments at Optiva and seeing how, the high net worth institutions manage their money and their portfolios made me realize that actually, like, I could do that too, or, you could do that. Just a little bit of work.
What is that work like? I'm still trying to find, like, if I was to start shorting, other than options and that sort of stuff, like, you can't do it in the purest sense, can you?
Yeah, well, it's not easy. It's not for everyone. But, the way that the ETFs have been set up, and they're a great instrument to allow people to get access to asset classes they couldn't ordinarily do. You can buy ETFs that go up when market goes down. There are CFDs. They're definitely not for everyone. But there are instruments out there that just behave like stocks, but their price moves when the markets go down. So inverse ETFs, there are volatility ETFs, definitely not for everyone. You've got to be aware what the instrument is, but it's exactly the same mechanism. It's like buying a stock, you buy an ETF. If the stock market goes down, this ETF goes up. It's like buying a stock that goes up, and if you buy it at A and you sell it at A plus 2, you've made $2. So we did some research. I think there's only 3 inverse ETFs in Australia, and they're not very liquid. So, the way I like to think of it is everything you do is a risk. From the price you pay for execution, it's going to produce losses. Having to cross a spread, if a share is not very frequently traded, it's going to have a very big spread. And for you to buy it, you need to be very patient to sit on the bid to buy it, or you need to pay a big spread. So I like to trade or invest where there's liquid markets, and I know that I can get out, because if something happens or my opportunity comes to get out, I can get out quickly. My issue with the Australian market is a lot of these stocks aren't liquid. So you're sitting there holding stocks. It's like, yeah, great, everything's happened. The time you try to get out of them, it's actually too expensive, and you've given back a lot of your returns. So stocks like B-Bus, I haven't seen it trade. I wouldn't suspect it trades a hell of a lot. But those are things that investors need to consider, regardless if you're an investor or a regular trader. That's pretty much the premise behind Stake. I don't want to give it too much of a plug, but the whole point is you've got more stocks at a lower price point with more liquidity, and stocks that actually represent where you probably want to be investing and trading. So that's pretty much the reason behind why we set up Stake, because Australians hadn't been given that simple access.
Well, let's go into that. So you came back from the States and obviously recognised that there was a huge opportunity for Australian investors that they were missing out on.
Yep.
And even when I was a younger investor trying to buy stocks in the United States, you're paying incredibly high brokerage fees, or it was impossible through my brokerage, CommSec or whatever it was, So you've come to rectify that problem?
Yeah, absolutely. It's been a bit of a myth, actually, that investing overseas is hard for Australians, but actually it's the exact opposite. The price of execution, you've already got brokers in the US that charge $0.
Yes.
With Robinhood, and there's another one out there called Matador, but the execution cost in the US is negligible. It's quite complex. complex, the reasons why, but trust me, it's pretty much zero.
And when you're saying execution costs, you mean brokerage?
Yeah, brokerage. Sorry. Got it. Yeah, you're right. Brokerage costs. I'm still thinking institutional language. Brokerage in the US is pretty much zero. There's 12 exchanges. They all compete for your trade, so they offer incentives, so it pushes down prices. Plus, you've got, I think there's only over 15,000 stocks in the US if you include the NYC, NASDAQ, and some of the OTC names. We focus on the top sort of 3,000 at stake because that's where most people actually want to access. And opening an account is fully digital. So all the paper that you do to open an Aussie account and the KYC forms and actually sending it in and signing it if you're opening up and just even an individual name is complicated. And then you add on top all the US tax forms that they claim are difficult. They've been automated as well. Like you can have an account and have your money on the way in 5 minutes in Australia and then you're paying less to trade. We had a customer the other day. He actually, believe it or not, actually shares a suite with us, like in our office building. And he was trying to open up an account with an international trading account with one of the bank brokers. It took him 6 weeks.
Wow.
Yeah, it could and I think his quote was, "Oh my God, it took me 6 minutes with you guys and it took me 6 weeks with name and shame." With X, Y, and Z.
Go on.
Westbound. I think international investing it's really important for Australians. Like we're part of the real world. The companies that we engage with on a daily basis, like I can see now, we're using an Apple product.
Yeah.
Probably just searched on Google. We're going to home watch Netflix.
Yeah.
Probably going to buy something on Amazon in the next month or so. Probably an NVIDIA chip somewhere in there.
Yeah.
Like these are all companies that you buy something on your Visa or your MasterCard. Like these companies are listed overseas. We've had Spotify and Dropbox recently list. Like it actually makes a lot more sense for Australians to actually be looking at what they understand. If they're going to invest in something they know, they should actually be investing in the company, at least starting with the companies they know. And those companies do not list in Australia. Full stop.
So I know you don't want to give it a plug, but I'll give it a plug. So just to reiterate that Stake offers no brokerage on all your trade.
That's right.
And that's across, 3,500?
Just under, yeah.
Just under 3,500 US stocks.
Yeah.
And one of the great things that I think Stake offers is its user experience. Yeah. And so you're not going on there and logging into what seems like a brokerage platform and you get data and everything thrown in your face and bids and asks and all that sort of stuff,
absolutely.
right?
Yep.
You go on there and it kind of feels like you're shopping for a t-shirt or, and you get an understanding of who's following the stocks on a scale of, I guess, stake investors. Is that right?
That's right, yes. It's all people that use the platform.
And you can also sort of search based on themes. And one that I liked the other day, I don't know if it's still up, but was the feeling ballsy about Russia or something.
No, we've got to be careful there. I think it was I want to test my nerve with Russian stuff.
That's right.
Yeah. So we try to have a bit of sense of humour about it. I think investing is and financial services is people tread very lightly, but it's really important to talk about finance and your finances. And, it should be spoken about like what you're invested in, what you're trading, why you're trading it. Like it should be a community. Like you shouldn't have to go at it alone. So we want to build a community and we want it to make it a little bit light. So people that have been intimidated by the markets shouldn't be, because it really is there for everyone. As I said right at the beginning, it doesn't discriminate. Like you can have a 16-year-old who's better than a 68-year-old when it comes to investing. Like it's more art than it is science, believe it or not, and everyone's got a right to learn that art.
Yeah, I agree. One other thing that I think is great about Stake, and that you definitely can't do without brokers, as far as I'm aware, is the ability to buy a part of a stock. So, for example, Apple at the moment, actually, I don't know what the price of Apple is, but I'm thinking Amazon is over $1,000, Alphabet's over $1,000.
Sure.
And for our listeners, spending $1,000 on one stock, it is nerve-wracking, or you don't want to spend your whole savings on one stock. Yeah. So Stake gives you the ability to buy a part of a stock. So two things, I guess, is how does that actually happen? And do you actually own the stock? Where do you own it? And what are there any other fees like brokerage or free brokerage? Almost sounds too good to be true.
No, definitely. No, fair enough. Look, I'll answer the first part, the fractional investing, the partial. So what happens in the US is it's a little bit different here in Australia. In Australia, you have everything held on HIN at the central clearer. So everyone gets a HIN number when they open an account. In the US, it's held by a big custodian. So our custodian is ICBC Financial Services, like part of the ICBC, the big Chinese bank, and they hold all the assets of our brokers' accounts. And then our broker in the US, Drywall, manages those books and records. So if me and you want to buy half an Amazon share each, the custodian has that one full share in their custody in their accounts, and then our broker-dealer, Drywall, will assign half of it beneficially to you and half of it to me.
Okay.
So if someone buys 0.3 of a share and no one else buys the other 0.7, our custodian actually holds the whole share over there. And so they've got 0.7 on their book as the remainder.
So it doesn't influence liquidity at all?
No, you get what's called national best bid and offer. You get best execution at all times. So literally you can buy a half a share exactly the same way you can buy a whole share. If you want to go and you just want to invest, you can invest as little as $50 on stake, or you can go buy a whole share, obviously for over $1,000. That's really up to you. But we really want to break down all the barriers it takes to get invested in the US market. And I think the fact that the US offers this fractional capability is great for either first-time investors or people that just want to dedicate a certain amount for a stock. If the share price is $633 and they want to invest $5,000, they can go buy 9 shares, whatever it is, and they could get a round number, or they could just go, I want to get $5,000. They can go do that.
It makes it instantly more accessible.
Yeah, it's more understandable, right?
Piece of the pie in Amazon, you can get a piece of the pie without having to fork out $50.
Yeah, exactly. And then the brokerage. So obviously mentioned before that the brokerage costs in the US are pretty much free, but obviously we need to make some money, survive, and build a great product.
Yeah.
So we make our money. There's 2 ways we make our money. Well, actually 3 ways. We make our money on the FX. So when you transfer your money from Aussie dollars to US dollars, we take a percentage of that, but you only move it into US dollars. You keep it as long as you like, and then when you bring it back. So when you transfer between AUD and USD, so when you choose to do that, we make some money on the cash sitting in the account in the US, so a small amount of interest. So if it's uninvested or it's sitting just in cash, we make the interest on that.
Yeah.
And then if you go buy a gift card for a buddy or for a niece or your mum on Mother's Day or whatever, we have a gift card fee which covers the costs in transacting on a gift card.
That's one thing we didn't mention is that you can gift a stock with stake, which is a pretty cool idea.
Yeah.
I'd love it if my mum sent me an Amazon stock.
So there you go, mum.
What's next for stake? You've got the US market. I mean, stake's 4 years old? 3?
No, less. We really only launched properly in August last year. We sort of had a soft launch in April and went really hard in August. So really only 6 months old.
Oh, wow.
Yeah.
Okay, so fresh.
Yeah, really, very fresh. Although I don't feel so fresh. We're working too hard.
But are you looking at some point expanding in terms of markets that are on offer?
Yeah, I mean, our key focus is really focusing on our existing users and providing a better product.
Yeah.
We went web first, so we sort of gone back and looked at what our current users want, and an app has been the biggest thing for them.
Yeah.
So an app will be rolled out in sort of 6 to 8 weeks. There'll be a wait list, and we'll just try to drum up a bit of interest and get people a little bit excited about the app. So we think it's going to be game-changing in terms of we've been going through the wireframes and the builder start, and we're super excited about what it's going to be. It's going to make investing or trading even simpler than it currently is on stake, which we think is really simple, but it's going to take that to the next level. And we're finalising all our account types. So in Australia, people trade with all different. Assume your users are mainly individual. There are Australians that have been begging to try to get overseas their investments that trade in different vehicles. So we'll complete that. And then really our focus is actually probably on beyond that is really just some more features like the faster funding, so people can get their cash over quicker, easier ways to fund. So if you want a debit card and credit card, if you just want to just quickly test the system, making it really, really straightforward. We look to e-commerce as our benchmark, and that is light years ahead of financial services. So that's what we're trying to catch up to, and that means moving fast with our product releases and really listening to our customers and making sure the product is literally as simple as buying a t-shirt line. And that's what we hold ourselves to.
Yeah. Let's go back to sort of some basics of investing.
Sure.
We get a lot of value from speaking to people like you for our listeners. So when did you make your first trade? At what age? And what was one of the hardest things you found about actually starting to invest?
I actually think I got given some stock for my bar mitzvah, believe it or not, when I was 13. I think if I had kept it, I'd probably be retired. But,
was it Berkshire?
No, it wasn't. It was they didn't give US stocks away back then. You could only trade Aussie stocks till April last year on stake.
Right.
I mean, US stocks. Definitely wasn't Berkshire. And then I placed my first independent trade when I had, I did the stock market competition when I was in year 11.
Yeah, through the ASX.
It was through the ASX. Score maybe it was year 10. When it's that far back, it's all pretty much the same year, unfortunately. Yeah, and then I definitely remember placing my first trade on the market when I was at university. It was an Aussie mining stock, and I put in, I think, about $500 or $600 at the time.
Yeah.
I can remember the feeling still, feeling like I got to watch this thing like a hawk now forever. Can't remember what it did. There's been so many trades since then. And then I've always just kept an eye on the market, being in financial services, either through the law firm or through university. I studied finance. And I grew up in a family. My dad is an accountant, and so he was involved goal. Is
Where your maths comes from.
Actually, my maths comes from my mum.
Right.
Believe it or not, she studied medicine. She was a lot smarter than my dad. I'm going to say that out there because she'll tell you if I don't. And then literally, with just getting into it, just being in the market, I quickly realized it actually wasn't about the buying and selling. It's about actually managing your own emotions and what you're trying to achieve. You're not competing against anyone in the market. You're actually competing against yourself. So just knowing what sort of personality I had, which was probably you can tell highly, energetic, and I probably couldn't hold on to a trade for a particularly long time without feeling itchy. So just understanding that about myself and working on those things. And for me, trading actually became a way to improve myself. And that's what's so exciting about it. It doesn't matter what you're buying and selling. You could be trading Aussie, you could be trading US, you could be trading the European market, you could be trading, Indonesian stocks. It's exactly the same language. It's all about understanding what you want to get out of the market and how you're going to do that. You've got a plan for it. And so, that journey started obviously 20 years ago, and it's always evolved.
So what's your sort of current learning at the moment? Like you're always learning something. What's your 2018 focus, do you think?
Be more organized, stick to your plan and trade your plan, which means every night going home, updating my Excel sheet, making sure I've got the prices in from the previous day. If I'm going to do something silly, just taking a step back, going get a glass of water, little things like that. They sound like anything you do. Like you just got to remain calm and try to be as systematic as possible, because if emotion takes over, then you're on the back foot.
So when you say plan, do you mean that you have exit targets, for example, that you want to achieve, profit targets, or to say to a young investor have a plan? What would be some things that you would sort of think about engaging?
The most important thing for a young investor is being prepared to be wrong. Like trading or investing is not about being right or wrong. It's actually about making money. So you could be wrong 8 times out of 10, but those 2 times can make up. Yeah, exactly. Like if you get 5 or 6 times on your stock where you cut your losses after 10%, you can lose, the 10% times 8, but then you can make 600 or 700% on those 2 times. And that's where your money comes from. So my thing is actually have a stop loss in there. Know that I'm going to invest $500, and when this is down to $350, I'm out of here no matter what. I've just got this wrong. There's nothing wrong with being wrong whatsoever. As I said, I think I probably, from when I looked at my numbers, I get it wrong about 60-70% of the time, but it's the 30-40% that you make all your money on. And if you can make sure that those losses are small and that you stick to your stop loss and you execute that plan and you're unemotional about it, I got this wrong. There's nothing wrong with me. This trade didn't work out. Move on, get out, next opportunity. There are so many stocks trading at different point in time. Your stock is not the one the one that you're losing on is not the one that you're going to make money on. It's not going to turn around. So get out, move on, find your next opportunity.
So do you stop loss everything?
Absolutely. Yeah. And that's what I mean about don't find an excuse. Oh, this time's different. It's never different.
Yeah, right. So don't hold on.
Nah, don't. Hope is not a strategy.
Yeah.
It's just not a strategy.
It might turn around though.
Yeah, exactly.
So you're obviously heavily invested in the US markets.
Yeah, and Aussie as well.
Are there any other markets that interest you?
I've got some European stuff, that's in the private market. I think China's really interesting. You've got a massive population there. But you can access it all through the US market. For me, I trade more the instrument than the company itself. I look at, I want to buy something at A and sell it at B. That's all I'm trying to do. It doesn't matter if the company does potassium mining or whatever, within chemicals, or is a retailer. If there's demand for the stock and it's likely to continue going up, I want to own that stock. And if I think I can sell it at a higher price, I want to sell it. I think I can sell it. I'm definitely not tied to a market. That's just my strategy. Some people like bigger thematic things. I think, India's going to take off. India's performed amazingly, by the way. Some people say I have to get into China's middle class. I want exposure to that. Well, everyone's got a different strategy. My strategy just is I want to buy it A and sell it B. It doesn't matter what it is. And I think for me, the US offers the best opportunity to do that because the execution is low. The cost of brokerage is very low. Sorry. I'm learning slowly. So the cost of execution is low. You've got great opportunity and you've got so many different asset classes there. So I could, if oil's moving, I could buy an ETF in oil. If oil's going down, I could buy an inverse ETF on oil. So just having my exposure to the US gives me more than enough to deal with to generate returns. So that's where my focus is. And and I don't think you need much more than that. People say I want access to every single market, but when you actually look at the numbers, like when Australians go invest overseas, 85 to 90% of it's in the US.
Yeah.
All the other, to tell you the truth, the other markets, it's BS. You don't need access to all of it.
Yeah, right.
You just need access to something that works for you. If trading in London works for someone, that's what they should stick at.
Yeah.
For me, the US is perfect.
Yeah, nice. So let's have a quick look at the markets as a whole. So
Sure.
I think early Feb, we had a correction.
Yeah.
And then since then, really, the market's been quite volatile relative to what it's been over the last, say, since the GFC, really.
Sure.
So as a trader, I guess that is more exciting for you than it has been over the past, 8 years or so.
Yeah.
And so where do you see the next 4 or 5 years going?
Well, I think the US is the leading indicator for the global markets. So that's the first thing to realize. Volatility doesn't last forever, but it does, or it can signify a change. So we've seen a pretty much a general bull market really since 2009 when we came out of the 2007-2008 GFC. And to me, I'm nervous, to be honest.
Really?
I'm generally nervous. So, I worry about people, especially our customers. Like the tendency is for people to buy stocks. Some people may say it's a great opportunity. Great. If their strategy is I want to hold for 30 years, they're probably going to find, right? If you're planning on holding 5 or you've got the stomach to go through ups and downs, then it's a different proposition. I don't have that stomach, so I try. I think, as I said, it's all about understanding yourself. So for me, I'm a little bit nervous. This volatility just seems a little bit unusual. We saw some really crazy stuff in February with some of the volatility markers. The VIX was up around 50, which is like unheard of for a couple of day move. I think for me, there is a lot that people just need to keep an eye on. We've gone up at night. Markets don't always go up. No. They go up, they go down, they go sideways, right? Just be aware that if they start to go down, it doesn't mean they're just going to turn around and go up again. It could go down for 1 year, 3 months, it could go down 5 years. Who knows? Like Japan went down for 20 years. So as an investor, it's more like make sure. I think stock picking is coming back. That's my big thing. Everyone's been in these passive ETFs and basically just putting money into passive funds. And as the markets rallied, everyone's looked like a hero. But when the markets start going sideways or down and ETFs don't make money anymore, you actually have to have a strategy, and you may need to start getting into stock picking. And I think if you teach yourself how to pick stocks, or you teach yourself how to invest, or you can build a strategy and build the internal wherewithal to start managing your own money, you're going to be a lot better.
So where is the best place to start teaching yourself to invest? That's a massive question, but where would you start if you were a beginner?
I think what you guys are doing is amazing. As I said to you when I was chatting, I think there's a really big gap in terms of just getting people into the market. The best place is just to get your hands dirty and get a foot in the door. And what you guys are doing is amazing. I'll tell you that.
Thank you.
I think just buying a share, seeing how it works.
Yeah.
I obviously can't make any recommendations, but buy something you understand. Think the business model. Think it's going to last for a while. It's just always a great place to start. Start small, obviously, and then follow the stock. Read the news. Go. There's so much great free information out there. You can read Bloomberg. You can Motley Fool, great service. A lot of our users also use Motley Fool. They're excellent. I really think just even reading the newspaper, whether or not you agree with the journalists, just to have some skin in the game, is the best way to learn. And you'll actually learn and start looking at how you respond to news. What do you think? Is there an opportunity? Did I get that right? There's some great books out there that we can talk about as well that I absolutely encourage people to read. Like I would spend hours in the library getting trading books. I think every public library in Australia would have at least 10 or 15 trading books. Yeah. No doubt. I know the ones around where I live, there's always, trading books, and there's some amazing people out there, even on Twitter, that, talk about stocks. Peter Brandt, Mark Minervini, guys that I follow that they talk about the market and they just want people to improve, and that's all. It's just, there's so much information.
It's a common theme when we interview people like you that they always come back to just read. I just wanted to briefly touch on the volatility again.
Sure.
If you don't mind, what sort of percentage are you in the market as compared to out of the market?
I am got a few inverse trades on. Okay. So don't think you can really, I'm pretty much cash neutral if you think of it. Actually, I'm still cash long in terms of my net investments. So I've like my longs minus my shorts, which is shorts are the inverse. I'm still long, but I've got quite a bit of cash on the side at the moment.
Yeah.
So I'd say I'm 50% invested probably.
Okay. So you've mentioned there that that's the way that you are protecting yourself in this short and long. What's something that a beginner investor can do to make sure that if something does eventuate, that they're not going to be heavily one way or heavily the other? What's a simple strategy, do you think?
A simple strategy is buy stocks that are going up. Like everyone goes, I want to buy a stock that's going down because it's cheap. Like if you think about anything that happens, if a stock is going down, it's probably going down for a reason. Just because markets as a whole go down doesn't mean that all stocks go down. It generally is the big stocks. If an index, if the S&P or the NASDAQ goes down, doesn't mean that every stock on the NASDAQ goes down. It means that the weighting of those stocks, the big stocks are going down. There are still stocks that are going to go up. Like pick a stock that looks healthy. Like you just look at the chart and you go, that looks pretty healthy. Like that's the trend is your friend.
Yeah,
right? Like things that are good are going to continue to be good.
Yeah.
Companies that are underperforming probably going to underperform until they don't. So the beginning could literally go, I understand that company. I know how it makes money. I look at its chart and that share price is increasing. It's probably a good bet. If the share price is decreasing, like if you just look at the chart and it goes from top left to bottom right, it's probably not worth owning. If it's going from bottom left to top right,
get on board.
Yeah, you're more likely to make money.
Yeah, right.
Yeah.
So speaking of undervalued, overvalued, we'll play a bit of a game.
Sure.
So I've got a couple of stocks here and asset classes that I'll run through, and if you can just give me a general vibe on it.
Yeah.
You don't have to give me a reason why.
Sure.
But if you could, that would be great.
Absolutely, sure.
We'll start off with buy or sell gold.
Buy.
Okay. So buy or sell Facebook.
Sell. Absolutely.
Buy or sell Tesla.
Sell.
Interesting. What about...
I can give you my reasoning. I mean, I haven't looked at Tesla very closely. As I said, I think we're moving into like a cycle. I'm a little bit more nervous. So for me, if I was long in Tesla, I'd probably take cash.
Okay. Two stocks that have just IPO'd recently and Stake did a bit of a competition with was Spotify and Dropbox.
Yeah.
So buy or sell Spotify?
I'll watch both, actually. They haven't traded for long enough for me to get a sense of what's happening and what the demand is. I don't know enough about the companies. I know a little bit, but not enough to dip my toes in.
Well, I know Dropbox doesn't even make profit. So.
Yeah. I don't think Spotify does either. I think I'll watch both of those pretty closely, but I'll watch.
Okay. Afterpay. Buy or sell?
I told you this last time, didn't I? Sell.
Sell.
Yeah.
Why? It's cheap. The trend's down.
The trend is down. It's broken a big trend. I was telling you sell at 750, wasn't I?
Yeah.
Now you're asking me at 530. That's not fair. I still think it's a sell. As I said, you stick with it. It's making you money. Stick with it.
Okay. Berkshire.
It depends what your strategy is. If you're there to hold for 30 years, it's definitely a buy. Great story and it'll continue to be great. Short term, watch.
Okay. On a broader scale, the S&P 500.
Sell.
Okay. So you're quite bearish.
I'm nervous. Yeah. Bitcoin. Chart tells me, can I hedge my bets by being a watch sell?
No.
If I have to place a trade, it'll be a sell. Trend is down.
Are you in Bitcoin?
I'm not.
No.
I've got a lot of mates that are. Very interesting discussion. No, I've never actually been in it. Just never had the time. As I said, like trading the US markets, I'm sure it would be fascinating to trade Bitcoin, but never got around to it. But I think it's been great on the side note for people to get into the market and be able to understand how markets move, prices move around.
I mean, it was an emotional roller coaster.
Totally, yeah.
If you want to understand your emotions,
exactly.
get in Bitcoin.
Yeah.
So then cryptocurrency in a broader scale, buy or sell?
Yeah, I don't think you can look at it holistically. I think the way I understand crypto is that these are coins that relate to an underlying business asset class, so I have to watch as a whole thing. I think thematically, I think it's absolutely fascinating. I think it's brilliant for the world, but I don't know enough to comment on direction.
If Uber was to go public, would buy or sell?
Price.
Yeah, true.
Yeah.
Optical would know these things.
Yeah, I don't know. It's going to be a big beast. Yeah, it's always price dependent. Like would I buy it for $10? Absolutely. Would I buy it for $400 billion? Probably not. So we'll see what it lists at.
Fair.
Yeah.
So let's wrap up with our final three.
Sure.
We always ask this to every investor that we interview, and we kick off with what book or books do you think are the best ones to read?
Absolutely. My three favourite trading books is the old classic, Reminiscence of a Stock Operator, Jesse Livermore. We got it for all of our staff Christmas.
Oh, nice.
To read.
I've never heard of it.
Yeah, you've got to read. It's amazing.
Okay.
We'll get him a copy. We've got a few around the office. The other one is the Schwager books, Stock Market Wizards.
Yeah.
It's just really good inspiration and just sort of seeing that it doesn't matter, where you come from in life, what you do. The markets offer opportunity for anyone, and that to me is pretty much, I think we share that same approach. So I definitely recommend the Schwager book. And then one of the Schwager interviews really changed my approach to trading, and that was a guy, Mark Minervini, who wrote How to Trade Like a Stock Market Wizard. Funny name, but his approach in the book is just so logical, and it's pretty much what we spoke about, and it sort of determines my medium-term thinking on a trade. I'd rather buy a stock that is up already, because I'd rather buy highs because they're probably going to go higher. I'd rather buy lows because they're probably going to go lower. And he sets it out brilliantly, and it's a great read. And I'll add one more as well.
Yeah.
It's a Stan Weinstein book, How to Make Money in Bull and Bear Markets. That's the name of the book. And a couple of I've got 2 copies actually, so the interns at our office were reading it, and it's also a great book. So I'll give you 4, just 1 free.
That's good.
Yeah.
That's good. I've only heard of one. So
okay, cool. I'll send them through.
Add them to my collection.
No, definitely. If you can, if you can get your audience to read out, and they'll be in a much better.
Yeah, nice. So you kind of touched on it before, but what's your go-to source for investing information on a day-to-day basis?
The market itself. I am a price and volume person. The news has happened after the share price.
Yeah.
You've just got to be in it. You've got to be watching the market. I look at charts because they don't lie to me.
Mm-hmm.
They don't tell me stories about not what's happening. They actually tell me what's happening. So if the price has gone from $1 to $1.05, that's exactly what's happened. That's all I need to know. But obviously, it's interesting to read what's happening in companies, and we obviously talk about, markets at work. But if I was going to, as a more novice person, I'd probably look at Bloomberg or Market Watch. They're great. Trading View's very good as well. More for that sort of analytical sort of investor. And then, believe it or not, Stock Twits, if you can find the right person.
Yeah.
If you can find the right person to follow, there's some great people on that. They can just talk about stocks, and they'll reference something, you go have a look and you just learn a little more. Yeah. So there's so much out there. You can get lost as well. So pick your one source that you really like and stick it.
All right. So final question. What advice, investing or otherwise, would you give to yourself when you were back starting investing?
Don't listen to tips.
Okay.
Yeah. At the end of the day, it's you who's putting on the trade, and it's got to. No one's going to. Everyone tells you what to buy, and never tell you when to sell. And you make money selling. You don't actually make money buying. Yeah. You can go. I bought that share at $1, went to $1.50. But if it starts going down to 94, down through your $1 buy, no one's going to tell you to sell it.
Mm-hmm.
The only person that decides that is you. So know why you buy a stock, know why you sell it, focus on the sell, and you'll be fine. So for me, a tip doesn't help you because the tip's only there on the buy side, and the money's made on the sell side.
Yeah, it's like Bitcoin, man, not get out.
Exactly right. Yeah, it's just paper profits.
Exactly.
But you can turn paper into money if you've got a clear strategy and you're focused. So so my thing would be focus on the selling price, not buying. You don't make money buying.
That's a wrap, Matt.
Oh, I like it. Very good.
Thanks.
Thanks
for joining us on the show. I've had a great time.
Yeah,
and
absolutely. I appreciate
I'm really excited to see how Stake evolves. Yeah. I've opened an account.
Oh, good.
And as I said, I would definitely encourage our listeners to check you guys out.
I appreciate
it's a great opportunity to get access to the US stock market and zero brokerage. You can't go wrong. Yeah. Appreciate it.
No, cheers.
Thanks for coming.
Thank you so much. Thanks for having me.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.